Exercise 18-16, identify the business, service, merchandise, or manufacturing business. Selected data for the three companies are given below. All inventory amounts are ending balances and all amounts are in millions. So we can click here to view the data. So our first requirement is using the above data to determine the company type, identify each company as a service company, a merchandising company, or manufacturing company. So when we pop this open, we get our data table for company A, B, and C. And we're going to go ahead and review our slides showing the financial statements for a service, a merchandising, and a manufacturing company. We've got the income statement on top and balance sheet on bottom. So for an income statement of a service company, there is no cost of goods sold. And on the balance sheet, there is no inventory because they only sell services, not products or goods. And products or goods are just two different ways to say the same thing. And then with a merchandising company, on the other hand, they do have a cost of goods sold on the income statement, and they also have merchandise inventory on the balance sheet. And then a manufacturing company also has cost of goods sold on the income statement, and then also on the balance sheet they have the raw materials inventory, work in process inventory, and finished goods inventory. So let's go back to our problem. So now we have to figure out what type of company each of these is, and because company B has the least amount of accounts, let's start there. Notice it doesn't have a COGS, a cost of goods sold, and it does not have an inventory account. So company B must be a service company. So we can go ahead and input that there for company B, service company. And then for company C, notice they have a merchandising inventory account and then also a cost of goods sold. And because they have that merchandising inventory, that is going to make them a merchandising company. And then company A, they have a finished goods inventory, meaning it is a manufacturing company. And because it is a manufacturing company, also it must have a cost of goods sold, and then it also has a cost of goods manufactured as well right here. So company A is a manufacturing company. Let's go ahead and check our answer. Excellent. So before moving on, make sure you're familiar with the types of accounts that appear on the income statement and the balance sheet for the different types of companies, whether they sell services, they sell merchandise that they did not make, or a manufacturing company, which means they actually did make the product.